This Breakingviews GDF 7% sweetener, a decent result for international power shareholders, says the Breakingviews team. And the People's Bank of China takes a small but a significant step. With me to discuss the stories is Chris Hughes. I want to start with China. Your headline says the freer yuan sends the right message. I mean, that message is basically China is not heading for a hard landing and we're comfortable with the economy, right?
Well, the message is more that actually, you know, the needed economic reform that we all want to see is kind of moving forward. You know, it's a small step, isn't it? You know, allowing the yuan to move within a ever so slightly wider band. You know, it's not radical in terms of the kind of
small step, Chris. But what it implies is huge, surely. It implies we probably won't get the hard landing that we're all worried about, or at least that they don't think we'll get that hard landing.
I don't think you can draw a firm economic prediction from it. I think this is actually about the management of the economy and actually the attitude towards, you know, opening up, making it easier for there to be, you know, for cross-border capital moves, opening up the capital account. I mean, it's really about this bigger picture of how China is modernising the economy. And, you know, previously, of course, the thought was, well, they're desperately worried about letting the currency strengthen because of the impact, you know, that would have on exports. Now, actually, we've seen some rather, as you allude to, you know, some rather sort of relatively weaker data from China lately. So the question is actually whether, you know, if they actually give bigger freedom to the currency to move, you know, maybe it'll actually weaken. So, you know, things in a matter of months, you know, you can be the whole kind of outlook for the currency, you know, has changed. But I think within if you take a longer term, sort of multi-year, decade view, this is a very significant moment.
Okay. Let's look at the corporate story. International power. You think they've got a good deal here on the table from GDF?
Yeah, look, I mean, GDF already owned a big slab of the company, 7% of the company. So, you know, when you're the directors of international power, how on earth are you going to get a good price out of the parent when they come along trying to buy the other 30%? But actually, they've done a really good job here. It's very difficult when you don't really have much leverage when the company bidding for you kind of already has control. I mean, you know, question, why do they pay more for control they've already got? But somehow they've put on their poker face and they've done some really good hard negotiation. And even though markets have been wobbling quite severely actually throughout the more intense phase of these talks, they've managed to bump them up to just below 420p. I think they were initially in, you know, comfortably below four pounds. Right, yeah. And the market had already done a lot of work for them. The market had been pushing up the price of international power shares quite a lot actually since February. So, you know, for the directors to squeeze out more from a pretty kind of weak position, we're just pointing out that's really job well done.
Okay.
Job well done.
All right. Chris, many thanks. Chris Hughes. For more agenda-setting insights, do watch our US Breakingviews show. That comes on every day, 12:30 Eastern, 16:30 GMT. Of course, you can watch that on demand on the Breakingviews website and on Reuters.com. I'm Axel Threlfall. This is Reuters.